BTI stock, British American Tobacco. This stock is up 7% year to date, which is quite a lot compared to the S&P 500, which is down 10% year to date. BTI stock is loved among the investor because of the dividends. Current dividend yield is at 7.3%, which is really high. But how about the future of this company, since it's a sin stock focusing on tobacco? So is this a future-proof business? In this video I'm going to show you real quickly what BTI does, a view at the historical returns, the fundamental analysis, dividends, their major competitor, and in the last part I'm giving you my price target to see if they are a buy or not. And I think you definitely want to see that part, so make sure to watch until the end. And I'm also very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does BTI do? British American Tobacco is neck and neck with Philip Morris International to be the largest listed global tobacco company. Slightly larger than PMI on net revenue, but slightly smaller on tobacco volume. British American Global has several major brands in its portfolio and the firm also sells vapor e-cigarettes. When we dive into the latest presentation, we see that they are focused on a better tomorrow, with three major categories. A new category, which represents 2 billion right now. A focus on strong brands, with a 5 billion revenue target for this new category. And of course, they are committed to shareholder returns. So this seems quite good and interesting to me. This new category, the non-combustibles, is growing at 32% compound annual growth rate for BTI. The market itself is growing at 31% compound annual growth rate. And this is also supported by the combustibles growth of 3% compound annual growth rate and 20 bps per annum average. So this is pretty decent. From 2017 to 2021, this new category was growing at 44% compound annual growth rate. It's expected to be a 5 billion revenue category, as I told a second ago. To 2025, it's expected to grow at 25% compound annual growth rate, which seems realistic, since it will be harder to grow in high numbers when you become bigger. And there's quite some room to grow with this new category, which is divided within the three major brands they have. In the US, still 83% of the smokers use combustibles, while only 7% use vapor, which is the new category. So this means there's plenty of room to grow. And with that being said, it's time to check the historical returns to see what happened there. I decided to include the S&P 500 as a benchmark and also two of their major competitors, Altria, ticker symbol MO, and Philip Morris, ticker symbol PM. On the 5-year chart we see that BTI returned a minus 9.8% including dividends, so this doesn't look good to me. The S&P 500 returned 89% including dividends, so you were better off with owning the S&P 500 ETF. The two other stocks didn't do any better, with Mo returning 2% and PM did the best out of 3 with 13.5% return. And keep in mind that this number is including dividends. On the 1-year chart we see that BTI returned a 16.9%, which is very good. The S&P 500 returned a minus 2.6%, while Mo is nearly flat with almost 1% and PM returned 4.5%. On the 6-month chart we see that BTI returned a minus 9.5%, while the S&P 500 had a minus 2% return. Mo is at minus 7% and PM is at minus 5% return. On the 1-month chart we see that BTI is nearly flat, while the S&P 500 returned 12%. Mo returned 6.7% and PM returned almost 6%. So to be honest, your return with BTI wasn't really that great, especially on the 5-year chart with a minus 9.8% including dividends. But does this mean that BTI stock should be avoided? Let's find out by checking the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. I also want to mention that I'm almost at 1000 subscribers, so help me achieving this huge milestone by giving me a subscribe. In return, you receive similar analysis to this one every week. Let's continue by diving into the fundamentals. BTI is a 93 billion market cap company with a PE ratio of 11, which could indicate that this company is undervalued. 12 trailing month revenue is at 31 billion and it has gone up quite a lot in the long run, but in the past 3 years it's nearly flat, so keep that in mind. Net income is at 8.2 billion, which gives us a profit margin of 26.5%, which is really nice since it's above the 10% minimum. The big difference between the 5-year average and the current profit margin was because of a 45 billion increase in net income in 2017-18. So I'm not that worried about this big drop. But the things I don't like are the return on assets and return on equity. In my opinion, this should be above 10%, so this doesn't look that good. But to be honest, the current return on invested capital is higher than the 5-year average, so this looks good to me. Another thing that I don't like is the fact that debt is way too high compared to the cash position. Right now, BTI has 4 billion in cash while debt is at 44 billion, so this doesn't look any good. And you want the free cash flow to be increasing, because free cash flow is used to pay down debt of course, but also to buy back shares, pay dividends, do acquisitions and very important, research and development. In this graph we see that free cash flow went up and down quite a lot in the past. And in 2019 it made a big jump, which is related to the acquisition. So to be honest, I don't like this pattern at all. It's not increasing nice and steady, so definitely keep an eye on this number. Another important metric for me are the shares outstanding. You want this number to be decreasing since this will add a lot of value to the investor. EPS will go up and it will be easier to maintain the dividends and of course increase them. Here we see that BTI has issued a lot of new shares which dilute you as an investor. So this is also something I really don't like about this company. And when we check the dividends, we see why people love BTI. Dividend yield is at 7.3%, which is really high. Payout ratio is not displayed here, but it's around 60% when we check it, which is pretty high to be honest. But keep in mind that a high dividend yield is causing this. Next to that, the fact that they issue a lot of new shares doesn't help either. This will increase the payout ratio as well. The 5-year growth rate is at 5.5%, which is pretty low, but with the dividend yield sitting at already at 7.3%, I don't mind. BTI has increased the dividends for 3 years in a row. The next part of this video will be about the fundamentals of BTI versus the competitors. I decided to include Altria and Philip Morris. We see that PM is by far the biggest company in terms of market cap and employees. We also see that all companies are trading for a low PE ratio, except for PM, which is significantly higher. PM has the highest revenue growth year over year, but BTI has the highest 5-year revenue compound annual growth rate. Net income is decreasing at BTI and Mo, while PM is increasing. Free cash flow is also the biggest at PM. So to me, PM is the winner here. BTI has the highest gross profit margin, but PM has the highest net income margin. PM also has the highest return on total capital. So to me, PM is again the winner here. When we compare the dividends, we see that Mo has the highest dividend yields and also the highest dividend compound annual growth rate. But Mo and PM have a higher dividend growth streak. So to me, they are the winner here. Overall, I think BTI didn't do very well compared to the competitors. So let's check the price target to see if BTI stock is a buy. I'm using the Everything Money software to come up with 3 price targets based on a low, mid and high assumption. We have to fill in some key numbers, starting off with the revenue growth. I'm a bit conservative on the revenue growth in my low assumption, so I'm filling in -1%. For the mid assumption, I'm filling in 2%, and for the high assumption, I'm filling in 5%. For the profit margin, I'm filling in 26% for the low assumption, 29% for the mid assumption, and 32% for the high assumption. So to be honest, this is very optimistic. Free cash flow margin, I'm filling in 30, 32 and 34%. For both PE ratio and price to free cash flow, I'm filling in 12, 13 and 14. For my desired annual return, I'm filling in 15, which is higher than the usual 12.5%, because I want a higher margin of safety, since I think the smoking industry will decrease over a longer period of time. Right now, BTI is at $40. I hit analyze, and we do see some green numbers. We have a low price target of $26 to $30, a mid price target of $36 to $40, and a high price target of $51 to $54. So if you believe these high numbers, then BTI stock is a buy. To me, it feels like they are in the range of a low to mid. So this means the stock has to fall down a lot. My final conclusion is that BTI may seem great from a dividend perspective, But with a minus 10% total return on the 5-year chart, I'm not convinced that BTI is a good investment. The new product category may seem great, but to me the core business could be at risk since more people quit smoking nowadays. So for now I'm skipping BTI stock, and I will analyze it from time to time to see how this new product category is developing. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.